Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Praveen Jaipuriar, CEO at CCL Products India, joining in. Welcome to the show, Mr. Jaipuriar, and a pleasure to speak to you. Overall, if you see in terms of where the numbers are concerned, they were pretty broadly in line with what the street was expecting as well. Internally, how would you see the quarter versus last couple of quarters that have been affected across businesses due to the pandemic?
Yeah, so, just as it has happened with most of the businesses, things started to ease in this quarter, although the challenges remain. But the third wave, although it is pretty strong, is not affecting the business so much. And we could, do well in this quarter, and our execution of orders were pretty much in line with what we were expecting. And that's the reason we could get good growth numbers in this quarter.
Right. So overall, if you see in terms of the challenges that businesses have been facing, what are the key ones that you would be looking at?
So, if you were to see the big time challenges, there were challenges at two fronts largely, the last 2 years. One was the challenge at the demand front, the consumer demand front. And there were businesses which, got affected because the demand for certain products and services got drastically reduced, for example, hospitality and travel. But largely, product categories, especially in the FMCG area, foods and beverages, the demand did not go down. In fact, in some of the categories, the demand actually went up because people wanted to be sure of, keeping the product categories at home, and they were using more than that they would have otherwise done so. So that wasn't the case with us. We face challenges in terms of, one is running the factories, because that became a challenge with cases rising. There would be worker villages and all that which would get quarantined, and therefore getting people into your factory became difficult. So that was one challenge. And the second biggest challenge was at the logistics front. So that became a challenge, because logistics was one area which suffered a lot during pandemic, and it continues to do so because there was a disturbance, and once that disturbance took place, I think it's still not got back to normal. So that's a challenge we also have been facing.
Right. And overall, if you see in terms of where the margin front is concerned, we've seen a dip versus what we've seen in the previous quarters as a comparison. What's the reason for that?
So it's actually, if you see the mathematics of margin, it's actually only an optical dip, because the coffee prices are rising very steeply. So when the coffee, and if you understand our model, we work on cost plus model. So the day we do contract, that day we secure coffee beans, and the contract is done on the current coffee prices. So what happens is that your top line goes, very high. So the top line goes, it almost follows the curve of the coffee prices rise. So what happens is that your margins, because it is percentage of top line, seems to be contracting a little bit here and there. But on an absolute basis, which is what we call it internally, that are we earning absolute margins per kilo basis, is that intact or not? So that is pretty much intact. So that doesn't get affected. So it's only an optical this thing that you will see that there is a little contraction in the margins here and there.
Right. And overall, if you see in terms of domestic versus exports, where have you seen higher traction?
So, domestic is because of the fact that our brands are new, the bases are small. So therefore, the growths are higher. We are almost growing at 40% on YTD basis. And even every quarter, the growth trajectory has been similar at 45%. The export market, because obviously the bases are high, YTD growths are at around 19-20%. But, with that kind of basis, 19-20% itself is a very robust growth. So really, we really can't put a finger down that which is growing faster and which is going slower. I think both the segments have done extremely well for us.
Right. And overall, in terms of where green coffee prices go, as you mentioned as well, they have been at decadal highs right now. So are you expecting any impact on profitability in the near future?
Not really. As I told you, we work on cost plus model. So when we do the contract or when we secure a contract with a client, that contract is based on that day's prices. So once the order is confirmed, we secure coffee to that extent. We procure coffee to that extent. So fundamentally, our absolute margins will always be protected, whether the coffee prices are going up or going down. Yes, there are certain impacts here and there, but those are little, very marginal in nature. So there won't be any fundamental impact to our business in terms of margins.
Right. And what are the factors that are actually affecting coffee prices? Yeah, I mean, there is inflation, supply chain disruptions. These are few, but are we seeing, a damaged coffee crop, which is impacting and that which could continue, where from here on, we could see a further increase that could come in terms of prices?
So yeah, I think the basic reason has been the damage in the crops, especially in Brazil, which is one of the largest grower of coffee. So one region gets impacted, it kind of has a spiraling effect on most of the regions. So the coffee table goes up, the prices goes up. So that has been the reason. And what happens is coffee. If you were to track multiple years of coffee prices, you will see that there is a cyclical trend of 4 to 5 years. So every 4 to 5 years, there will be a trend where coffee prices go up. Leading to what will happen is that when the coffee prices go up, as it happens with any agricultural commodity, the acreage will increase because farmers would see that okay, more money is getting there. But coffee has a crop cycle of 4 years, so it takes another 3 to 4 years to kind of things to settle back at the previous levels. So really at this moment, but also the fact is that most of the crop damage happened for Arabica coffee. Yeah, is largely grown at higher altitude, and that is getting a little impacted by the climatic changes and all that. Robusta seems to be fairly okay, but it also has an effect because if Arabica goes up, Robusta also grows up because there'll be down trading and people will kind of shift. So that has led to overall increase. Now, going forward, it's a little bit of, it's like anybody's guess. But our read of the market is that in the near and midterm future, the coffee prices will continue to remain where it is. The good part is that the coffee consumption, at the consumer level, hasn't gone down in spite of price increases. So that's a heartening thing that consumers continue to drink, coffee. In fact, drink more. So that's the heartening part of it. But it also makes you believe that if the demand is that strong, even if the supply increases a little bit here and there, the prices will remain at higher levels.
Right. And overall, in terms of the volume growth trajectory and capacity utilization, how is that looking like?
So, our volumes are, at a YTD level around 18%, 17-18% volume growth is what we are getting. And that we look forward to continue in the coming quarters as well. And as far as capacity utilization is concerned, we are almost at 85% capacity utilization as of now.
Okay. And currently, what's the additions that we're looking at in terms of capacity, and how are we looking to fund the capacity addition from here on?
So, capacity, let's say we just completed a couple of months ago line balancing at Vietnam. So we increased our capacity by 3,500 tons there. So from 10,000, we went to 13,000. And we are now looking to double the capacity there to almost 27,000 tons. So another addition of another 13,000, 14,000 tons will happen. That is likely to happen by, let's say, the third quarter this year. Third quarter as in next year, financial year, third quarter, which is October, December quarter.
Okay.
That's the time we are looking to commission it, unless and until, I'm hoping that everything else related to COVID doesn't impact. But if things goes well, then we should be able to commission that. And really, it's almost a 20 million project. And right now we are working out the details. Probably it will be part internal accruals and part debt. But that will come to know, and we'll be able to tell you a little later from now once we have got about it.
And sure. And Mr. Jaipuriar, what about the trial production that has started from the agglomeration facility in India?
Yeah, so we have started the trial production, although a lot is still not utilized because we did not see a lot of jump in the aglo demand. A lot of SD also was there. But hopefully this quarter onwards, we'll be able to run it at, at substantially good capacity utilization there as well.
Right. So overall, my last question coming to you is, if you have to look at the company, say from a 3 to 5 year perspective from here, what are the next milestones that we are looking at?
Okay, so Yeah, I know that's a question we probably get from all quarters. That was the correct the next milestone. But I'll answer this in two parts. One is that our first and foremost objective is, can we keep driving the same growth momentum? And if we were to drive the same growth momentum, then so last year we did a turnover of around 1,240 crores. So by 2025, if we were to do a similar growth of 17-18%, we should end up at around 2,400
Mm.
500 crores by that time. So that's what is there in our head right now. But yeah, having said so, we are just taking it step by step, watching the coffee prices, watching things
Correct.
happening across the globe, and making sure that this growth momentum is maintained.
Right. And another question coming in from a consumption perspective is, number one, a lot of small pack sizes is something which is picking up as well. So how big a strategy is that for a company like yours? And secondly, when you're talking of online and offline channels as well, due to the kind of volumes the online channels pick up, the discounting is really high. So is there a clash that you see on the pricing front as well between, say, an offline store to an online store, or between D2C?
Okay. Sorry, the first thing that you were asked was about
Small pack sizes. How
small
big
pack
is?
sizes.
Yeah.
Yeah. So for us, it is actually now, as a group level, when we add everything, our domestic sales, which is our own brand, as well as private label, the small packs would account to almost 20% of our business. Yeah. And we intend to grow that, because even the domestic market will grow, the brands will grow, and also our endeavor to give a complete solution to our clients across the globe in terms of packing it in the units they want to will also grow. So we are looking at a higher trajectory of growth in the small pack. And that's the reason we had set up a complete packaging unit at our SEZ plant, which is at Sulurpet. So we have come now this quarter, the whole plant, the packing unit should be complete, and that will give us an added advantage in terms of capacity to pack more small packs. So that's our thinking and strategy on this small pack. Now coming to offline versus online and discounting and things like that. See, that conflict is always there. 20 years ago, when modern trade had come into picture, the conflict between traditional retail and modern trade had come up, and it continues to do so. You will keep hearing that a lot of small retailers association keep boycotting large companies because they probably end up giving more discounts either at modern trade or in D2C channel. So that conflict is there. But what we are looking at is that how can we make sure that our products are just not sold, it's not sold on just on the discount factor. So we have a product proposition that is going forward. We have got a brand proposition going forward, and we like to kind of build those even in the online space than just treat it as a discount channel. So if you see our discounting, you won't see much of a difference between our online prices versus a modern trade prices versus at a retail prices. So we maintain a kind of a parity, except for a little bit of things here and there.
Absolutely. All right, Mr. Jaipuria, thank you so much for joining us on the show. Always a pleasure to speak to you and Shrikant as well a lot of times.
Yeah.
Thank you. Stay safe and speak to you soon again, and good luck.
Thank you so much, and best of wishes from all our side.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.